Hmm. Wonderful. All right. Hello, everyone, and welcome to the session for today. It's the Web of Nonprofit Compliance, How to Survive an Audit and Other Concerns. I want to thank the New Haven Free Public Library and the Ives Squared portion of the library for sponsoring this workshop series. This is the fourth. And before we spoke about nonprofit reporting, how to start a nonprofit, and fiscal sponsorship. If you're interested in any of those sessions, they are on the New Haven Free Public Library's Facebook page. we're going to get going, and as people join either in the library or online, we will just welcome them, and don't worry, there's plenty of time for questions at the end if anybody comes late. All right. I love this quote, helping people doesn't have to be an unsound financial strategy. Melinda Gates and the Gates Foundation is a key philanthropist in this space, and being in the social impact and social good space is a wonderful strategy, and it doesn't mean that we need to worry about it being an unsound financial strategy. We just have to think about it a little differently. Hello, my name is Rosalind Zavras. I'm the CEO of a small consulting firm called Europa Consulting. We work specifically with nonprofits, helping them optimize their finance and operations for scale or just for continued success. Our agenda for today, we're going to be covering a little bit about tax compliance. I really want to emphasize that this is an intro session. So if you have more questions after today, please speak to an accountant, but I can give you the basics of tax compliance, what are internal controls and what they mean for a nonprofit, the basics of a nonprofit audit. Again, I really recommend speaking to your accountant after this session if you have more questions, but because of that, very fortunate to have a guest speaker who is a very seasoned auditor and accountant here with us to also answer any of the questions you have. So let's get going. So what, a nonprofit has a tax return? I've heard that question a lot. The idea that you're a nonprofit means that you don't have to pay taxes. So why do you have a tax return? Well, nonprofits have a requirement to be transparent with their funds and internal controls and internal management. That means that even though they don't have to pay taxes, they have to be good stewards of the money that is coming in to the organization for the public good. That takes the form of what is called a 990. That is the nonprofit's annual return. And that details a lot of information that includes the financial and operating activity, compliance and internal policy details, as well as the funding sources. So the nonprofit tax return, often just called the 990, is the document that the federal government uses to ensure transparency and sound financial management for nonprofit organizations. For this part of the presentation, my source is the IRS publication 557, which details all of the requirements for a nonprofit. If you have any questions, please, that is a great source of information. So tax returns. As I mentioned, 501c3 status, which is the federal not-for-profit designation, allows organizations to be exempt from paying income tax, but it doesn't make them exempt from filing their financial information, and it doesn't also make them exempt from other types of taxes, which we will cover shortly. So a big note that the IRS requires almost all nonprofits, regardless of size, to file a tax return each year. There are a couple of key examples for certain religious organizations, but the rule of thumb is even if you are a small nonprofit, you still need to file a 990. Your 990 is just a little bit simpler and easier. 3 consecutive years of not filing your 990 will result in an automatic revocation of tax-exempt status. So it's really important to know, even if you have very little revenue or very little activity, you must file your 990 to maintain your tax-exempt status. And as of a few years ago, all returns are filed electronically, and they're hopefully pretty easy. The smaller ones anyway. And there are penalties for filing late. So just keep it in mind, even if you're a small organization and you're only filling out the 990 postcard, it's really simple. You still need to file it on time. And the fees are tiered fees based on the size of the organization. So just keep in mind You need to file your 990 and you need to do it on time. So what are the different 990s, right? I mentioned that if you're a smaller organization, it's a little bit easier. That's because there's a form called 990N. It's a basic form. It's pretty much organizational information, a little bit of information about your finances, and it's for nonprofits with less than $50,000 in gross receipts. There's also the 990EZ. The 990EZ is a summarized version of the full 990 for organizations between 50,000 and 200,000 in gross receipts. Now, question is, what if you're right on that mark between 49 one year, 51,000 another year? Which form do you use? You have no penalty for filing the slightly more complicated form. So if you're right on that cusp, generally, the nonprofits I've worked with have chosen to file the 990EZ, but it is an average of your gross receipts. So if you made only 20,000 one year and 51,000 the next year, you could be eligible to still file the 990N. And then you have the full 990. So this is for organizations with more than 200,000 in gross receipts in a year, and it's the regular tax return. That tax return has a variety of schedules on it depending on your activities for the year. So the 990 could be a much bigger and complicated document depending on all of the various activities that you've completed in that year. So give yourself plenty of time to fill this out, especially if you hit that 200,000 threshold. Private foundations have a different form. It's called 990PF. So if you're a private foundation, that is the form that you will need to follow. Your IRS determination letter will also on it indicate which form, if you are required to file the 990, again, like I said, some religious institutions have exceptions, or if you file the 990PF. So regardless of the type of return that you're filing, the 990s are public information. So a lot of nonprofits think of that in kind of a scary way. Oh goodness, all of our financials are public. But I like to think about it a different way. It's your opportunity to really tell the world about your organization. There's sections to talk about the activities that you've completed. You can add attachments to your 990 if you'd like. And it's also just a method to show the world how much you are a financial steward of your organization's money. So use it as an opportunity to shine and really think of it as a positive addition to the world of transparency and accountability. So as I mentioned, the 990 can be very detailed, and especially now we're talking about the full 990. The 990N and the 990EZ are much smaller and have fewer components. So there are financial activities and governance questions throughout the 990. And here are the sort of the list of reports and questions that you will need to gather. So your statement of financial position, statement of functional expenses. There's a checklist of the required additional schedules. As I mentioned, there is the 990 can get pretty complicated depending on the activities that you're doing in that particular year. So that means you go through this checklist to see what additional schedules you might need beyond the base of the 990. There's also statements regarding other IRS filings and tax compliance that are a part of this sort of this bucket of reports. There are governance and management disclosures. There's a list of policies that the IRS recommends any nonprofit have, such as a conflict of interest policy. These are great opportunities for you to have a quick and easy list of policies you should implement in your organization. You also will need to list your officers, directors, trustees, and key employees, as well as your highest compensated employees and contractors. So just because someone's a contractor, if they are highly compensated, they will also be on your 990. And then you will need to reconcile your net assets. So as we talked about in our previous sessions, if you want to learn a little bit more about what net assets are, I highly recommend you look at our other recording, but it's the funds that you have donated and anything that you have left over that you haven't spent from that designation is a quick summary of what that is. You also get an opportunity to talk about the organization details and mission activities. So this is where I was saying it's a great opportunity to shine. You get to have a summary of your mission statement, your activities, and a summary of your program service accomplishments. So in the past year, if you were able to launch a new initiative, and that maybe increased cost in some way, or maybe you opened up a new location, these are all wonderful things to talk about in your 990. I've seen many nonprofits, as I mentioned, add additional graphs and details to really emphasize all of the work that they've done. And then you do need to talk about your funding. So there is obviously your statement of revenue, which details the revenue based on different categories. But depending on the amount of revenue that you received, you might also need a schedule of contributors. So just make sure as you're receiving donations that you're writing down. And for receiving purposes, you need to do this anyway. Obviously, who donated and what the amount is, because that might come into play for your schedule of contributors. You don't necessarily have to post addresses of these individuals online. You just need to have this information detailed. So some other things to think about when we're talking about tax compliance specifically is that the 990 is due on the 15th day of the 5th month after your fiscal year ends. So not every nonprofit has a fiscal year, which is the same as the calendar year. So your 990 might be due not on May 15th, but maybe later in the year, but it is dependent on your fiscal year. And again, your fiscal year, you wrote into your application for 501c3 status. So it should be on your determination letter what your fiscal year is. So Form 990T, again, the 990 itself has a lot of components and extra components. So if you had what is called unrelated business income, this is an additional form you need to file. I have another slide shortly that details how you can begin to think, is it unrelated business income or not? Because I know that's another thing that's often really confusing. In the state of Connecticut, sales tax, if you are selling goods, that might not be fully exempt. And I have a little bit more detail on that shortly as well. So just keep that in mind. If you're a nonprofit in the state of Connecticut, you could be subject to sales tax. And if you are running a nonprofit in another state, just be aware to look up the rules and regulations for that state, because every state treats sales tax very differently. Pension plans also often have their own separate filing requirements, as well as 1099s have a filing requirement that has a different deadline, and payroll taxes have their own requirements. So, when we're talking about taxes and tax compliance for nonprofit, we need to think about the nonprofit's returns, but then all of the other pieces of tax that you might interact with. This is obviously a full list, but it depends on your activities, specific situation to understand exactly which forms you might need to file. So let's touch on unrelated business taxable income really briefly. So it's income from trade or business that isn't substantially related to the mission of the organization. And that does not mean that you can't charge for your services. Plenty of nonprofits charge revenue for their services, such as a nonprofit fitness center that is trying to support health and wellness in the community, and they have a slight membership. That is related to the purpose of the organization. So that does not count as unrelated business income. And donations do not count as unrelated business income. So the first question that you have to ask yourself, is it exchange? Are you receiving money in exchange for giving a good or service to the individual? If it is not an exchange, if it's a donation, then it's not unrelated business income. Is it for trade or business? If it's not for trade or business, for instance, it's a fundraising drive again, or maybe a bake sale, then it's not UBTI. Maybe, it's a thrift store, you're doing a bazaar, a holiday bazaar, so it is trade or business. The point of the bazaar is to fundraise, but also just to make a little money. But is it regularly done? You're doing it a one-time thing. It's not something that you do regularly. It's not like you have a thrift store open. Then if it's not regularly done, again, not UBTI. And then finally, is it unrelated to the mission? And so if it's not related to the mission, then if it is related to the mission, but it's still true for all of those things, that doesn't matter. It's not UBTI, but if it's unrelated, it is. So as you're thinking through these examples, just go yes, no, yes, no, yes, no, and that helps you get to, does that count as unrelated taxable business income? So sales tax specifically, this is very, very state specific. So in Connecticut, nonprofits are allowed 5 events, which taxes on the sale of goods is exempt. So you have 5 it's up to 5 days or 5 individual events, all of which are less than 24 hours. Essentially what that means, you could, again, have a holiday bazaar, and that bazaar lasts 2 days. That counts as 2 of the 5 for purposes of sales tax exemption. Say you have a holiday bazaar for 2 days, you do a bake sale, that's 1 day. Again, that now counts as 3 days of the 5. If you then wanted to have another event that is 4 days long, but you only have 2 days left, that means 2 days of sales are now subjected to sales tax and 2 days are not. So when you're looking at your calendar year and thinking about, we're having these events where we're selling items and tangible goods, then make sure that you are counting, right, how many days you have left. Note that items that are given away or raffles do not count as this as this sort of sale of goods event. And another thing to note, if you are a nonprofit in Connecticut, you do have a purchase tax exemption. So even if you are purchasing items to sell at these events, you can register to have a purchase tax exemption on those items, and that will save you a little bit of money. There's more detail. There's a link for the CT Department of Revenue Service that details this these rules. There was a notice that changed recently, well, sort of recently. So now that's compliance, and that's tax compliance. So let's talk about procedures to protect your nonprofit or internal controls. So we don't want to talk about it, but fraud happens. Fraud happens at a variety of organizations, companies, and nonprofits can be particularly vulnerable because they're resource strapped, right? They don't have a ton of different staff members to have separation of duties. They maybe lack a certain amount of oversight. There's not one thing that will ensure there's no fraud. It's rather a combination of internal controls to mitigate its effects or highlight when it does happen. The ACFE did a report on global occupational fraud and found some really interesting statistics, and specifically looking at nonprofits. Even though I think it was only 7% of the cases that they reviewed were nonprofits, the average loss was very high. So it's 639,000. So this is something that happens to nonprofits and can be pretty big. And the top 5 schemes of fraud were corruption, billing inconsistencies, problems with expense reimbursements, petty cash, and then something called non-cash. And the reasons that were cited for these incidences were control weaknesses, a lack of internal controls, a lack of management review, or an override of existing internal controls. And that could happen. And one of the biggest things about internal controls is, and accountability, is all members of the organization should be subject to internal controls. So even if you're the CEO or the executive director, if you need a receipt for every single transaction over $20, then everybody needs a receipt for every transaction over $20. And that's also the best way to get the rest of your team to follow these procedures if management is following them as well. This is a very interesting study if you want to delve into it. There's a lot of really good detail. So internal controls, let's talk about them. They are processes and procedures that help safeguard the organization. And I will say that they safeguard the organization from malicious fraud, but also mistakes. Mistakes happen. Someone accidentally will fat finger, one number, and that could have huge detriment, to the organization. And on your tax return, on your 990, there are questions about the internal controls that you have in place. So it is something that the IRS will ask about. So as I mentioned, it protects against fraud and errors. And little mistakes that happen. We all make mistakes. We're all human. So internal controls is really like, I like to think of it as another pair of eyes and another set of hands. And they need to be accessible to your organization's team and resources. If you only have 2 people on staff and you have a requirement that 3 people have to sign off on every single invoice, where's that 3rd person going to come from, right? So try to make and suggest internal controls that work for you, but also achieve some level of support and oversight. So there are a couple of different types of internal controls that we can chat through. So reconciliations, simply put, that's making sure that the transactions that are in your financial statements match what's actually taking place. So if you get donations via Stripe, just logging into the Stripe account, reconciling what's in Stripe is also what's in your financial system. Also reconciling your bank account, so downloading the bank statement and having someone check off that everything that's on the bank statement is also already in your accounting system. Policies and procedures, like I said, creating a policy that all receipts above a certain amount for transactions, that in other policies that you see will be around the person that's writing the check is not the person that received the invoice from the vendor, different things like that. Or any invoice from a vendor that's over $500 needs 2 people to sign it. That's another type of procedure I've seen a lot of organizations use. Audits, and we'll talk about audits more in a moment. Audits are great to check in, right? They're a wonderful opportunity to look into your processes and procedures. Are things going the way that you would expect? You can have internal audits, independent external audits. Note that some studies, though, I've seen audits of only detected fraud 4% of the time. So audits are a great tool to check in on financial health, but they're not going to be the only tool in your toolbox for preventing fraud and mistakes. Management review, so getting your board involved, making sure they've looked at the finances, that they review the bank reconciliations once they're done, things like that. Segregation of duties, as I mentioned, it's a great internal control, just having another set of eyes on any particular transaction, or especially if it handles cash or money coming from the bank. and leverage technology. We're in a wonderful space where there's all of this amazing technology out there. One of my favorite platforms is Expensify, simply because it's so easy to capture expenses. You can take a receipt, it'll automatically put the total in there, the expense category, the vendor, leverage technology so that these procedures and processes aren't so difficult. And so again, from that AFCE report, they found that at nonprofits, the most prevalent way that they found out about fraud was a tip. So another procedure and process or policy to put in place is a whistleblower policy, making sure you're protecting any individual that comes forward with something that they've noticed. I can say in my own experience, I would say that holds true. Anytime that there's been something that has gone on in the organization, it's because somebody brought it up to me or someone in the management team. Internal audits, as I mentioned, I've seen a figure of 4%, but internal audits where you're pulling a couple of transactions or a couple of receipts out of a stack of them have also been good for detecting fraud. Management review and examination of documents. I enjoy that 7% is just by accident. So this is to say, like I mentioned, there's not one silver bullet, but rather these are all tools in your toolkit for managing your finances and ensuring that, as I continue to say, we are good stewards of our donors' money. And I do want to highlight that segregation of duties for small organizations can be really, really difficult. If you're an organization of one, where you're the ED, you're the program officer, you're the operations person, find ways that you can somehow segregate those processes. In Connecticut, you have to have a board, right, of 3 people. So find ways your other board members can at least have eyes on, right? Maybe they're the ones that sign the checks, or both of your signature and one of the board members' signatures are on checks. Try to find, if you are processing payroll, someone else that can oversee or at least review your payroll processing. And again, work to create processes that make sense for you. And if it's too arduous, you're not going to do it, right? We're human. And then have written policies as much as you can. Try not to make this a big task, writing a 80-page finance manual is not what I'm suggesting, but rather writing down what are your key procedures and putting them in a place for all individuals that interact with your nonprofit to see. And also remember that there are certain policies that you will be asked about in your 990 or in your state filings as well. All right, so now audits. Audits is a favorite topic of conversation for so many people. It is something that to a lot of individuals can be really scary, but are, again, just a wonderful aspect of being a nonprofit, that we emphasize financial transparency. And so what is an audit? An audit primarily is an examination of your financial statements to ensure that they conform to specific standards. And in the US, nonprofits are supposed to be following the generally accepted accounting principles, also GAAP. So the idea is an audit examines your financial statements to ensure that you are GAAP compliant. We also have internal audits, as we mentioned. Those are done by your management team. That's probably not necessarily focusing on GAAP, but rather compliance with internal policies and procedures. These external audits, or independent audits as they're sometimes called, they are done by a certified public accountant. That person is external. You hire them to come do the audit and perform this work for you. The point is that they should be external. If you are a CPA and are working on a board and offer to audit the organization, that's not external, technically. That's still an internal member of the team. Some funders will ask for project audits. So maybe it's a part of getting a grant that they just want to know the audit of this particular project or program. Those can be done by an external CPA, or maybe it's the funder's auditor or CPA that will be involved. And then there are all these other audits that you could have. So you have payroll audits, you have a variety of mechanisms to review internal processes and procedures. And those are usually done by the industry professional that is a subject matter expert. So why in the world would we want to complete an audit if we didn't have to? I think, especially as I mentioned, if they're not that great at catching fraud, then why do we do them? They indicate financial responsibility and transparency and accountability to many of our donors. A lot of funders will ask for results of your audit. They'll like to see audited financials to know that the organization that they are donating to is financially sound and stable. In Connecticut, if you have over 500,000 in gross receipts, you must have an independent audit. So that is just one thing to note. If you're a small nonprofit in Connecticut, you don't have to go through an audit, but certain grants, certain funders will ask for it. And as I said, many grants require it, especially if you're going for a federal or state grant, they will ask for an independent audit. And I really enjoyed once you are finished with the audit and you get your management letter and you have the audit opinion, you have a great list of things that you can work on. So see it as an opportunity for improvement, see it as an opportunity to really invest internally so that next year it's even better and even stronger. And as I said, big myth, audits uncover fraud. Audits do many, many things, but that is not the whole reason. That's not the only reason you should do an audit. So what's our process? First, as I mentioned, you select an auditor. It's an interview process. They are a vendor. You are paying them to perform the audit. It is possible to have a pro bono auditor, but there are some auditors that would argue that by doing it pro bono, they are no longer independent. So that is one thing to think. It is an expense to have an audit, but there are a lot of auditors, especially for smaller organizations, that have a tiered charge structure. Once you've selected your auditor, you've interviewed them, you've onboarded them, there enters the planning phase. So one of the favorite quotes or acronyms that you'll hear is the PBC list, prepared by client. So it's a list of documents that the auditor will give you that you need to prepare so that they can begin to get a picture of your organization over the past year. The auditors will then complete field work. So that's when they work with you and your team to test transactions, evaluate your financial systems, look into more detail. And once they have compiled all the results of their field work, they will prepare their report and updated financial statements to share with the management team and the board. This whole process, depending on the size of your organization, how long the field work takes, could take about a month. Once you have selected your auditor, it could take longer, like I said, depending on how easy the field work is or is not. And then once they're done, you implement recommendations that they have in the management letter, and we'll start this whole process over again next year. So the audit report, there are opinions that are given in the audit findings. And there are 4 types of opinions. The best one is an unqualified opinion. There's no misrepresentation in the financial statements. It's a clean opinion. Everything looks great. This is an oversimplification of what these mean. There's a qualified opinion. It means that records are not misrepresented, but there are potentially some inconsistencies with GAAP that have been found. It's still overall positive, and a funder, if they see a qualified opinion, will like to know what caused the qualified opinion. And especially if you can say, oh, well, we've implemented maybe new procedures or you've shown improvement, they won't, it won't be a detriment. There is a disclaimer of opinion, which means there's not enough information and the organization pretty much needs a redo. I worked with a nonprofit recently that got this opinion, and it was because there just were not enough receipts. There was not enough detail. It was very difficult for them to get information. Not out of lack of trying, it was just poor record keeping. So the financial statements looked, represented well, but they couldn't confirm or deny it. So they were given a disclaimer of opinion and told, here are all of the things you need to fix so that next year we can actually issue an opinion. And then there's also an adverse opinion, meaning there's misrepresentation in the financial statements. GAAP is not being followed. This is the opinion that is the most negative. And again, if this happens, it's just an opportunity for improvement and ways everything that's listed as the reasons for the adverse opinion can be, action items for the management team for the next year. So how do we make an audit smoother? A great way to prepare for an audit is to do an internal audit. If you know that they're going to sample transactions, maybe sample transactions once a quarter, look for receipts, do little internal exercises so that you're going to be ready for the audit at the end of the year. Also, if you've selected your auditor, get a sample PBC list from them so that oh, what are all of the things that they're going to be asking for? And I can have that in advance, or at least in the back of my mind. Create an audit committee if you can, and that could be members of the board, that could be individuals within the organization. At least appoint someone who's the main point of contact that the auditors can work with. Typically in a larger organization, that would be, the director of finance or the director of accounting. But if you have a smaller team, maybe that's a rotating position year to year. This person is our audit POC this year, and next year it goes to somebody else. Share with your auditors. It's really helpful. The more information they have, often the more they can understand what's going on. So don't be afraid to share. Your auditors are your supporters as well. So try to give them as much information as possible up front. It'll also make the process faster, right? So that they're not constantly coming back and asking for, oh, well, this document or this document. If you can give them access to your accounting system, that also really helps. That normally goes really well. So a lot of the accounting packages have a view-only option. So maybe you can give your auditors view-only access to your QuickBooks or whatever your bookkeeping system is. And reconcile your transactions and your statements prior to your audit beginning, right? If you know that you have all of these pledges that you had last year and you haven't gone through and reviewed, are these good pledges, or do they have people paid them and we just haven't reconciled it? Do that work before your audit begins so that your auditor isn't, again, working through a lot of things and focusing maybe in some of the wrong areas. And so audit readiness post audits. So as I mentioned, the audit is a discrete point in time. It'll maybe take a month, maybe a little bit longer. So review, once you have your audit findings, review them with the management team and your accountants and anyone that is a part of your team that would be working with your financial statements. If they have recommendations for how to manage your internal controls, talk about that with the individuals involved, and then present it to the board, right? Get the board involved. They should be involved, and they should be a part of the implementation plan for implementing their recommendations. And so, like I said, prepare a plan to implement any recommendations that are laid out. Try to involve as many different people as a part of that plan. especially if you need to implement a whole new policy for expense reimbursements. Involve the department heads, involve the individuals that are going to be dealing with your team, so that they are part of understanding why a process needs to change, and they're a part of the conversation of how that will change. And give your auditors feedback at the end of the audit process, so you can make it smoother next year. Usually I've worked with auditors multiple years in a row. So the auditor that you have this year might still be the auditor you have next year. It's a relationship, on both ways, right? So you can tell them, oh, I really enjoyed this part of the audit, or it would have been clearer if we'd gotten our PVC list maybe a week earlier, things like that. Don't be afraid to say what went right and what could be improved. And then be prepared to share your audited financial statements with your donors, because oftentimes they will ask, especially bigger donors and, as I've mentioned before, grants. All right, so the quick run through of taxes and compliance. I want to welcome a colleague and friend who is a seasoned auditor and accountant with Wegner CPAs. So welcome to Yigit.
Thank you very much for having me here.
Let me put us back to the view. We have a couple of people here with us in the library, so I'm just getting that set up real quickly. And why is that over? One moment, sorry. Technical difficulty. All right, perfect. Let me turn this. Can you hear that all right? Or should I turn the volume up?
Yeah.
Okay. All right. Oh, it's this one. Okay. Hi.
Hello. I think it's cutting out a little bit.
Oh, we are having a bit of a delay, just to let you know.
Okay.
But that sounded better now.
It is better now, yeah.
Okay, great. So welcome. If you could just tell us a little bit about yourself and your background and experience with nonprofits.
Sure, yeah. First of all, thanks for having me here again. And my background is basically all in nonprofits. So I've been an auditor. This is my 17th year, and I've been a partner since 2017. And mainly work with nonprofits all my career. Initially, I worked on some other type of audits, but eventually I ended up with all nonprofits right now. Currently, all the clients I work with are nonprofits. And I really enjoy working with the nonprofits. I like being an auditor with a mission, like trying to help the organizations that do good in our communities and in the world. And it's more satisfying, I guess, to me personally than working commercial type audits.
It seems like the internet is still a little unstable, but I think we heard most of that. Yeah. Well, great. So you answered a little bit of what my first question was, which was why nonprofits. When you especially began working in auditing, what are some of the things that really
It just cut out again.
interesting
You can like
about
repeat.
nonprofit
Yeah.
audits, or even maybe yes. Rose, do you think that that's our connection by any chance? I can also, maybe this immersive view is taking up too much bandwidth. So let me just do gallery and see if that helps.
Okay.
Can you hear us any better?
Yeah.
Okay, perfect. No, so my question was, what was interesting or uniquely challenging about working with nonprofits?
Well, the whole accounting for nonprofits is different, as you may know. Like some concepts don't make true common sense, like promises to give, like restricted net assets, and everything. But I think those are like the unique parts. Like what I feel is different from other types of audits is like the focus of the audit, as you know, the nonprofits. Generally speaking, unless they have unrelated business income, they do not pay taxes like in a commercial audit. Most of the time, it's basically the focus on like the clients worry more about the taxes than the audit itself. And also like working with nonprofits, because of certain states have like lower thresholds, you end up working with a lot of smaller type organizations, which is different than like commercial audits, in the sense that most of the commercial audits, they are not required to have an audit by like a regulatory purpose, but they usually need an audit for like let's say a bank loan, or for their investors, or for something else, which basically those organizations that get audits are usually larger. They have like much more or experience in their accounting, and it's more resources. Basically, they have better controls and that. I think with the nonprofits, it's good to basically add value in terms of like making recommendations, like improving their operations. There's more value add on the side, in my opinion. Some people like commercial audits, some people don't. So, but that's why I really like as far as the number. And there is also a lot of variety. There's a lot of different types of organizations, a lot of different. Nice to hear the stories and interesting on how like usually they have a very passionate executive director, which is nice to listen to their stories as well.
And one point that you made that I really want to come back to, which is audits can add a lot of value, which especially for a smaller organization, maybe learning something that they didn't know before, or ways to, again, update internal controls. What are, when you're thinking about some of the recommendations that you've made, what are some of the things that you notice are places for improvement that keep coming up with various clients?
So the most common one in a smaller entity would be like segregation of duties, that they don't have any. Usually there's only one or two people, and segregation of duties is what we call preventive controls, that catches something before it happens. And then when you don't have that, you rely on detective controls, which is after the fact review. So the most common thing we recommend is someone, if it's a small entity, like maybe some board treasurer or someone from the board, review bank statements or credit card statements and things like that, especially for the executive director, because the good practice is to have someone supervisor review and approve their expenses. If you are an office assistant reviewing the executive director's credit card statements, that's not fair to you, because you don't want to be questioning your boss and your job is on the line and everything. So basically, it's the best practice to have someone above that level that can do something about it if you see something to review. And so that's like most common thing. The other one is before COVID, I guess it was more easy. Like now, like have two people present when the mail is open. The nonprofits, the nature of donations coming in are typically unexpected. So you may be receiving like a $200 check in the mail, but if that goes missing, no one is gonna know about it because no one else is seeing it. Just comes in, and so we recommend a lot of like two people opening the mail together. But in the COVID environment, I think some organizations are getting creative, having like Zoom meetings to open the mail when they come. So, but if that's not possible, and if there's a high risk of that happening, then we recommend getting like a lockbox in a bank where all the donations go there, and the bank basically deposits them in your account, and then you just get the mail. But it's the more expensive option. Luckily, more people are donating by online these days, so it's less of an issue. But in the past, it was a lot. Everything was coming in by check. The initial check 15 years ago, but now there's a lot of online donations, which is kind of reducing that risk. The other one is payroll, the review of payroll and who can access payroll, who can make changes to the payroll, and have someone else get notified. Let's say I'm the executive director, and then I enter the payroll information. If there's any changes, I do that, and then I review the payroll. Well, no one is checking up on me, so it makes sense to have someone be notified whenever there's changes to the pay raise or an employee is added or deleted. Just make sure if that's valid. Those are like the three main things I would say that comes up a lot. The other thing that's coming up usually now is with all the cyber attacks and hacking going on, like just looking to see what you have at risk, because certain states have different requirements. If like personal information is stolen, you have some obligations, right? So I think it's good to have that. We recommend like annual cybersecurity trainings to staff, like that talks about the current trends, what's happening, and how can you prevent that. Also, like having a cybersecurity insurance, because it's becoming more common. And it not only covers any losses like that, but it's like the number one asset you would have is the reputation. So if you go on the front page, and that significantly affects your donations. So those firms, like the insurance companies, may also pay for like PR to get you back on track. It's like that. So those are like some things we have been seeing. I mean, there's a lot of other, some of those.
And those are great suggestions, and really thinking about, how we can still protect our organizations while, acknowledging the reality of the world that we're also in. I have a lot of nonprofits that are using the lockbox, for instance, so that they don't really receive that many donations by mail anymore, but they also don't have a physical location anymore, So as we're moving into this more digital world, being flexible, but also talking to your auditors about, okay, well, this is the reality that we have. So how can we achieve this goal in this new world that is hybrid digital and physical or analog?
I think the technology is also helping with internal controls, like third-party payment systems like bill.com. You can set it up in a way that they don't go through unless there are certain approvals in place. And there's a record of when everything got approved, which really helps. And again, lockboxes, online donations, and other things are helping.
And a lot of online donation tools are also now free to use, especially for organizations that are below a certain amount of revenue. And they'll have the option for the donor to cover the fees. So, there are some really great technical tools. There's also memberships with organizations like TechSoup that will discount software for nonprofits as well. So leveraging technology doesn't have to come at a high cost for nonprofits.
Great point.
I know that we have one attendee virtually. So if you have a question, or if you have a question, let me know, and we can ask, or I continue to ask questions. Yeah.
Do you have to change your auditor every so many years?
That is a good question. What is best practice for the changing your auditors? How often do you have to change them? How many years?
First of all, it's not required, and the mandatory audit change was even actually recommended, like suggested for like publicly traded companies, and even that kind of wasn't approved, so it's not a requirement basically. But what they have, like public companies, have a partner rotation requirement, but nonprofits have no requirement. As a best practice, there's a high cost of changing your audit firm periodically. Like if I go into a relationship, if I know I'm going to be out in 3 years, like the cost will be significantly higher because there's a lot that goes in the initial year in the setup, and also even if we do like our best service, we're not going to keep the client. It's kind of like a not great from an audit perspective. But what I do recommend is if the auditor is not providing good service, if they got too comfortable with you, if they're not adding any value, if they're not making any recommendations after a certain year, I would start looking at that time. But if you are getting good service, if you are getting what you need, and if things are not like so comfortable with the auditor, they still keep doing their job, I think then I think it's better to keep your audit firm. What sometimes some organizations do is they do keep the same firm but change the audit team. We do that a lot. That way, it's a good approach. You get a new perspective because the person looking at, like the audit team is different. Every partner is different as to what they look and what they see. But the advantage is you don't need to train your auditors into your system. They should already know what's going on. They get all the information, and it's more cost effective, and you get better audits. The first year of audits are like probably the least, the worst audit you are getting from a quality perspective. If you comparatively speaking, of course you have certain standards and everything. But I think in your second to third year, you get like better audits as the organization. There's so much the auditors have time to spend, so maybe they are hitting just what they have to hit in the first year, and then in future years, it changes. You get better audits. There's an actually AI CPA article about that. And I think personally, I like keeping your audit firm as long as they are doing good service and giving you what you need, making recommendations, keep helping you improve. You may want to consider changing like the audit team every 5 years or so. And you can also go for RFPs if you like, but don't consider your audit firm as well. Don't change it just to change because you may not be getting a better firm or better service.
Great, thank you. And to highlight, a great way to select an audit firm, even if you're a smaller organization, is to issue an RFP or a request for proposals. That allows you to stipulate what you would like to see with your audit firm, and then also be able to judge apples to apples. It is very much an interview process, getting to know the auditors and the auditors getting to know you. So I like RFPs, even if they're just like a one-page document, because you begin to say, these are the questions and things that I want to consider as I'm choosing an auditor. What are some questions that you would put in an RFP to pick or to think about your upcoming auditor?
I would ask about their audit approach. How do they plan the audit? Do they perform the audit? I would make sure that I would ask how they communicate, if there are misstatements or any control deficiency, like what's the procedure, like how do they communicate that? And I would ask how do they treat technical assistance throughout the year, if they are going to charge for everything extra if it's not during audit time. How do they incorporate that into their audits? I think it's important. Those are like the main things. I just ask, of course, about their experience and make sure you request references of similar size firms and similar entities to see how they work with them. And in terms of evaluation, I've seen like some organizations put a weight on certain things, like their prior experience with nonprofit. That's like 40% of the weight, and then price is, let's say, 15%, 20%. And I would avoid picking the auditor with the lowest fee just for that reason, because there's so much that goes into an audit. You really want to get the good value out of it, and you want it to get done timely. And I think the least expensive option may not be the best option. The other thing I would look for is to make sure you don't want to be the smallest. You don't want to be a smaller firm's largest client. You don't want to be the smallest client of a large firm. You need to pick the audit firm that works best with your size. If you are the largest client of a small firm, they most likely don't have the expertise to help you as well. And if you are the smallest client of a large firm, you probably won't get good service because you won't be as important to them. So I think those are the things I would definitely consider.
Yeah, and so emphasizing, you were cutting up a little, so I'm going to repeat just a tiny bit.
Sure.
Their experience with nonprofits, their auditing philosophy, obviously their rate, but also thinking through what services and technical assistance they can provide throughout the year. So, if it's the type of firm where they do the audit and then they cut you off, right, and they're not really going to talk to you. I've always really enjoyed relationships with auditors when I know I can pick up the phone and say, oh, we're implementing this new program. Are there things we should keep in mind? Or we've got this new grant. So, in Yigit's point that the lowest cost might not be the best value and the best service that your organization will receive. Like I said, if it costs a little bit more, but you have that ability to call your auditors, it's huge, and that's a huge weight off of your shoulders for when the audit comes. But then it also, for when the audit comes, they're aware. They're like, oh, we've already talked about this. We know that this is coming up. And that longevity and that relationship is built throughout the year, not just at one time when they're, doing your field work. So Arthur has a good question in the chat that I'll read out so that everyone can hear. Are you required to have audited accounts if your gross receipts are over 500K to file, or can you file without being audited? And that's a good question because audit requirements are state by state. I do not believe that in the 990, it's a requirement to file to indicate that you have audited financials. Can you fact check me on that, Yigit?
Yeah, the audit is not an IRS requirement. The audits are state requirements. So let's say you can be an entity in California that audit threshold there is 2 million. You may have 1.5 million. You don't have to have an audit. But if you are in Connecticut, then yeah, you have, but not to file the 990. You needed to basically file your state return, which usually asks for a copy of the 990. So, and you need to satisfy both the IRS and state requirements. So, I guess the short answer is you don't have to have an audit to file the 990, but you have to have an audit to file your state.
Mhm. Great question. Do we have any other questions? Okay, just want to make sure the floor is open. The other questions, if I can remember them, that I had. So obviously I talked a little bit about some tips for making the audit smoother and post-audit. I'd love to talk about that unqualified and qualified opinions. What would be something that would cause, a qualified opinion while still overall being a positive, a positive outcome, even if the opinion is qualified?
So I guess the qualified opinion happens if one thing is not in conformity with the accepted accounting principles. So let's say we do it a lot with churches. Like sometimes they cannot substantiate the building value. So they have it on, but they don't have any documentation. It was built 100 years ago. Like no one has anything, and we cannot audit it because we have to see audit evidence. So then what we may say is, except for this, everything else is materially misstated. I mean, materially in accordance with GAAP. So basically, that's kind of like the difference between adverse opinion and qualified opinion is the degree of the level of the misstatement, basically. So if let's say your balance sheet is making it up like $10 million, 9.9 million is the building, then you may issue an adverse opinion. And it just depends on like the severity of the issue. But qualified opinion doesn't mean anything is really bad. It's just that means that something was not substantiated. That's like usually it's very explainable, and then the other things that may make your opinion qualified is if you are a parent organization and if you have a subsidiary and you're not presenting consolidated financial statements, like parents are required to present consolidated financials, and if you are presenting just the parent entity, not including the subsidiaries, that calls for a qualification. So that's also pretty common, and it's not a bad thing. It's just saying that this is what it is, and for some purposes it works, or some purposes it doesn't work. But I think those are like the overall qualified opinions explain what is being qualified. So it's pretty evident what it is. Sometimes there's not much you can do about it.
Great. And so the example was, we had some noisy people here.
Sure.
The library is picking up.
Yeah.
Like the example of, say it's a building that's really old. There's tons of buildings in New Haven, for instance, that were built in maybe the 1700s. The value of the building, no one really knows, right? So you have the value of the building on your financial statements, but can you verify it or qualify it? No. And so that was the initial example. Or the idea is that it's explainable, right? That there's something that is causing your a difference or an uncertainty, but it can be explained. With an adverse opinion, have you seen nonprofits have an adverse opinion one year and then jump all the way up to, fully qualified, or an unqualified opinion the next year? Is that jump possible, or is it more incremental that you've seen?
It depends on what it is for. I think if it's fixable or not, I think I haven't issued any adverse opinion. We have some qualified opinion, and that's cured for the next year. An example was we had an organization during the pandemic. They were like a $200,000 organization. Due to their mission, they ended up getting $43 million, and that money, checks were going to people's homes, like stuff like that. And because they didn't have two people opening the mail and the amount is substantial, we qualified the opinion, but then they ended up using a lockbox for the following year, and then they got fixed basically. So if it's an internal control type issue, usually on the receipt sides, we cannot substantiate, like we cannot audit what's not there. It's harder to audit that, so there's no way around it. Like if the amounts coming in is material, if there are no controls, there's no way to figure that out for us to get enough audit evidence. But yeah, to answer your question, it can happen. It just depends what it is and how the organization is addressing the issues.
Mm-hmm. And so that's the big thing with audits, is that it's a conversation, right? It depends. Depending on what the finding was, if that is something that can be changed, or if there's a fundamental structural challenge that the organization is working through. And especially I'd say in this post-COVID or COVID plus world that we live in, there are so many challenges, right, that we're all working through. And I similarly have had organizations that were very small and erupted, overnight, because they work in an area that's just focused on what we need at the moment. So this is, again, a good reason why having an established relationship with an auditing firm becomes really important, because then you can work through whatever these questions are and set a plan to address them. Arthur asked another good question in the chat. And it's one that I think we can also mention a little bit. I don't want to get too detailed into names, but do we have recommendations for US-based audit firms that focus or work best with small nonprofits? And so, I do also want to mention that Wegner CPAs is a great auditing firm. I invited them for a reason. I've loved working with Wegner in the past for multiple different types of organizations. But per Yigit's point, you don't want to be the smallest client at a large firm, and you don't want to be the largest client at a small firm. So when you're looking at CPAs and auditing firms, ask them about who their clients are. Ask partner organizations of yours that are similar size, similar mission, who they're using as recommendations as well. Do you have other ideas to find auditing firms that are very focused on small nonprofits?
I think it's mostly I don't have like and it's like every organization is different. I would get recommendations from either let's say if you use an accounting service, ask them to see if they have any audit firms, or if you have consultants like you, you can make some recommendations. For me, I'm not independent as to who I should recommend. Like I cannot recommend myself, but I think it depends on where you live, and it's just now that the work is more virtual, there is a lot of other entities. The part about, again, like even if you get recommendations, I would just keep interviewing them and ask questions to see if it's gonna be a right fit for you or not. And as with every industry, the CPA firms are having a lot of turnover. So depends on how they handle the turnover. They may be good one year, they may not be so good the next year. Maybe there are delays. So I would ask for recommendations for your from your peers or like the other consultants you have, and then make sure that you interview them and ask questions. Like one of them might be, let's say if there are some turnover, how do you handle that? How does it impact the timing of the audit, things like that. But I would typically avoid, again, picking the least expensive one, and if they don't have enough experience working with nonprofit entities. There are a lot of providers out there that are sole practitioners, and they may just do nonprofit audits after the tax season. They only do 2 of them a year, 2, 3 of them. They may not be the best fit for you due to the expertise.
All wonderful points. Well, I know that we are close to time, so I'm happy to answer any other questions. Thank you for the wonderful questions from Arthur. Do you have any other questions for me or Yi? Well, I want to thank you, and I thank the public library so much for hosting these conversations. I have really been enjoying them. And thank you so much to Yigit and Wegner CPAs for joining us.
Thanks for having me.
And have a great evening, everyone.
Thank you.
All right.